Hey guys, welcome to the Forex market research video. My name is Alexander Nikitin, and in today's video I will do the research for Euro Yen. I already calculated the average swing and the average duration of swing on different time frame for this pair on different algorithms. So here are the numbers. This is daily, 4 hour, 60, 30, 15 minute and 5 minute time frames. These are the average swings, and here's the period of extreme. So basically it is the highest high of the last 5 bars or the lowest low of the last 5 bars, and this one is the highest high of 10 bars, and so on and so forth. Okay, so average swing, average duration, average impulse, average correction. For my research, I need this number, the smallest correction possible on 60 minute. It is the smallest, for me, meaningful piece of market movement. Okay, and now let's start. I will close this. It is 589. Okay. Let me go here to my next Excel spreadsheet, and I'm to type 589 here. This will be my reversal factor, and maybe I need to close this one. Okay, as I don't need it. Okay, and I will type results here. Okay, if you guys are new, in my previous videos I've done euro dollar, dollar yen, pound dollar, and if you want to see the results, so these are the win probability, loss probability, the average risk reward and expectancy, and the same with second target, and another is the profit factor, is another one. What is interesting about this type of backtesting, this type of result, is that the edge is very stable. Just compare the numbers. The expectancy is 10 and 22. Then we go to expectancy 12 and 20, and then we have expectancy 10 and 21. So I expect the euro dollar will be somewhere 10, 11, 12 and 20, 21, 22. Okay, and if we compare with previous results, so let me open my other Excel spreadsheet, open other books. Let me show you. Okay. With the same algorithm, the same patterns, but different trade management, so you can see that the results are very much different. The expectancy is 0.07 on dollar yen, the expectancy is 0.22, and on pound dollar it is 0.0 something. So you can judge it looking at the charts. So one of them are amazing, others are more or less, and pound dollar is awful. So it is not stable at all. Okay. Don't save it. And if you will look at this, they are all very stable. The numbers are stable and they go to the right top, from the left bottom to the right top. Okay, this is what we actually need. I will explain you the trade management for the unified Gartley that I used, and the best method to explain it is actually to show you some setups. Okay, let us start. Let me first arrange the two. Close this. The two windows side by side. So I'll go here. Okay, and I choose my MetaTrader, and then I will stretch it this way. So I have enough space to type my date, initial risk, the chart pipsage that I get, and the chart pipsage for the target turn. I already set my MPS5 pattern recognition software to pips distance algorithm. I already set the value of 58.9, and I disabled all the patterns except custom pattern unified Gartley. Okay, well, what else? maybe something about rules. Okay, so we have, let me stretch it some way here. So we have a pattern, yes, like this, and it has 1, 2 red levels, 1 orange level, and 1, 2, 3 green levels. So what are these levels? They are actually the risk distance, half risk distance, and the same as risk distance is take profit distance, and we have half take profit distance and two risk take profit, so twice. Okay, so these distances are equal, this one and this one, and of course this one is also equal. So the second take profit is twice greater than the risk, and the first take profit is equal to the risk, and the trade plan for that opportunity, yes, and the trade plan for this looks this way. So let me show it to you. The pair is euro yen for now. JPY. Okay, enter with limit order, initial stop loss at 105 at say, reduce risk by half when half of risk reached. I mean, when this first green arrow is reached, then reduce the risk by half. Half take profit. Okay, break even when the first is reached, and of course close half when the first is reached, and close the second half is the second reach. I'm not doing those halves. I simply open two positions. It is the same as you open one position with a double lot, or you open two positions with one lot. And let me zoom it in and let's start. You will see the details in the backtest. I think in the backtest. Okay, I also did this interesting stuff. If we go to options and we go to charts objects, enabled show properties after creation. So it means that when I use this line, it shows me the parameters, the options of that. And I go to parameters, and what I do, I copy this time, Control C. You see that? And then I simply paste it, Control V here. It is very fast to record the time. Okay, so let us start. The first pattern looks this way. We didn't trigger here, then we spike to the downside, and let me stretch Fibonacci from here to here. You see that? Fibonacci. Let me show it this way. Oh, okay. From here to here, and you see it didn't reach the 5% A to D, so I just changed the 10% into 5% into a narrower range for this backtest. So this means that the movement didn't start earlier. Okay, so when the movement starts is that next candle, this white one. Let me zoom it in a bit more, so you could see that movement. So this white candle starts the pattern, and it is very simple. No target adjustment, nothing. Only the numbers as they are drawn by the algorithm. Okay, so we triggered at this candle, at this one, yes. Then we went higher. Then we reversed, opened here. We reached our half take profit. It means that we moved our stop loss to this one. Then potentially we spiked to the upside, but we didn't hit our stop loss. That was reduced. And then we go to hit first target and second target. So obviously it is a pattern, a winner. I place my vertical line at the candle that actually triggered the trade. Control C. So when I type the time, it is the time when my trade was triggered. Okay, and here I have numbers. The stop loss is 53.5 and first take profit is also 53.5. When I cut the risk, it is 26.8, it is half, and my second target is 10.71. So I also enable this stuff to calculate my numbers fast. It is only for back testing method. I only need it for this. Okay, so the chart result is take profit 5.35, yes, and then the same candle, I suppose, moves to hit the second target. Yes, we didn't come back to hit the break even, that's why we hit the second target. And the second target is 10.71. So the first trade is a winner. I think we need to stretch it slightly back. Okay, for all numbers to be seen. Okay, nice. So this was the first trade. The second trade is very simple. It starts here, moves here, and then it was triggered by this big candle, and this candle actually hits stop losses. 54.2, and then we type minus 54.2, and we type minus 54.2, because when you lose both of your positions, or you lose both of your halves. Okay, this one didn't come to completion. Okay, this one goes this way. So we first go here and then we reverse. Let us see if we hit our 5% area. No, this candle didn't hit that, so on the next candle we actually trigger the trade. Okay, let me first write down the trade, and the risk is 45.9. Okay, so what happens next is this. Price goes to the upside, all the way to the upside. It does not hit the stop loss, and then it goes to the downside, closes here. Then we open here, we go to the upside, and then we go to the downside, and look at this, we hit our half position, and then we open here, and then we go to the upside. And I remind you, when we hit our half, stop loss is moved from here to here, and this spike actually hit our stop loss, but it was half, and that's why instead of typing minus 45.9, we type minus 22.9, twice less, and here minus 22.9, also twice less. Okay, so I just do it. Wonderful. And now let's look at the second trade. It is here. So what it did, the entry is here. It spiked through the entry, and then it went immediately to the first target. Then it got to the upside, got to the downside, then it opened higher, and then it went to hit the entry. So it is first target and then break even. Completed here, then we go here, 42.8, then we go to type 42.8, and we type 0 here, and let me calculate the results. Okay, the results in pipsage. So 42.8 with 5-digit broker, it is actually 42.8. 5-digit broker, 3-digit with yen pairs. Well, the next pattern, how it moved this way, and then it reversed to the downside all the way down here. Okay, this spike and downside movement to the candle close hit the first target that is shown on the chart, and let me show you. And this spike hit the 5%, so the pattern is considered completed, and the one that hit targets after the completion. So this time I simply skip this pattern because it was completed. Okay, this one didn't complete. The next one, the bull. Look at this candle. It goes here, it then goes lower, nothing happens, then it goes higher, higher and higher, hits half, then it goes even higher, almost hit this first take profit, and then it reverses and goes to stop loss. As it hit half of the take profit, the stop loss is also reduced by half. Okay, so 354. Here we type minus 77, and here we type minus 77. Okay, and now they are substituted automatically. Yes, the formula is added automatically. Okay, a few more examples, just to have, let's have 10 examples to understand it correct with this strategy. Okay, so what happens here? Basically we have nothing. Okay, so what happened here? This weird C2D leg, it is okay. It didn't hit the A point, so roughly it is okay. And then the movement started to the downside. Obviously it started earlier than the pattern's level, and well, it didn't actually hit the 5%, but it invalidates the structure of the pattern, because the pattern should look this way, something of that kind, like this, like W. So when it is looking this way, yes, it is not looking like W. You see, from here to here, it is not a clear-cut W structure. That's why after these movements, it is not good to re-enter the pattern. So I simply skip this pattern. Okay, the next one is very good, very clear situation. If you doubt about the pattern, if the pattern is good or not, you simply skip it. Have doubt, stay out. I suppose it is a half loss. So we complete the pattern of this candle. So you see the entry, this candle. Then we open next candle, go first lower, then we go higher. Then we open next candle, first go lower, then we go higher, and we hit half. Starting from this, we actually cut our loss by half. And then this green candle, a black candle, actually hits our stop loss. Okay, so what we do, we type it Control C, Control V, and it was 37.0, and we had only 18.5, minus 18.5. Instead of full stop loss, we had only half. Then let's go to the next pattern, and the next pattern looks this way. So we completed at this candle. We then opened, we went lower, then we went higher, and then we closed here. As we went higher, we hit our half take profit. This means we move our stop loss to the half. And right now you cannot say what happens first. Either we hit half take profit and then half stop loss, or we hit half stop loss and then half take profit. And to understand this, we need to switch to lower time frame. Let us say 30 minutes. So I just stop the recalculation, I go to 30 minutes, and right now we see it very good that first it hits on the first candle it hits the half take profit, and on the next candle it hits half stop loss. So this one is half stop loss instead of win. It is not a win, it is half stop loss. Control C, Control V. This is the unique feature of the NPS 5 pattern recognition software. Simply stop it and switch to lower time frame to see what actually happened to get more precise backtest. 505 minus 202 and minus 202 here as well. Then we just go next. Don't forget to enable it when you calculate it further. Okay, another pattern looks this way, and it is very simple. We first go lower, 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 lower. We don't hit the take profit, no stop loss. Then we go open here, go to hit half, then we didn't hit stop loss, then we didn't hit anything. Then we go here, we didn't hit take profit, and then we go hit the half stop loss. Okay, so let's type the half stop loss. And it is 36.1 minus 18.1 and minus 18.1 half stop loss instead of full. So this pattern, okay, it actually triggered and went toward the stop loss straight. Okay, so the time for that is this, and the numbers are 37.0 minus 37.0 and minus 37.0. Okay, one more trade maybe, and enough for the day. Here is the pattern, but it doesn't look like W structure. Yes, so another trading is this one, and it goes straight to the stop loss. Very tight stop losses, that's why they hit very often. 63.9, and it was full 63.9 minus 63.9. Let me find some winners before I switch that. This one didn't complete, I suppose. Yes. This one looks okay. And look at this one. Simply switch it to manual, yes, and look at this W type structure like this, from here to here. Oh, come on. Should have a pattern here. Maybe I need to disable some filters. Oh yes, I need to disable them. Okay, they are not needed. If I disable some filters, maybe we have some trades that were not detected. Now it seems to me we didn't miss any. Well, 11 trades is not that big problem. Okay, so what do we have? We have it this way. You see the pattern. Its structure is pretty clear cut. And look what happens here. We first move higher, nothing. Then we move lower, half take profit, back to entry, and first take profit. So this one is first take profit winner. And the second position is 0, 512, then we go to hit 512, and then we hit 0. Okay, so let's enable some charting. We're negative for now, but it doesn't matter. You see the win probability is 27. It should be around 50%, so there is much more to be win. And the average risk reward is 1.56. It will recover, I'm pretty sure, because of this stability of the edge. We have completion of this candle. Then on the next candle we go to hit half, you see that, and then we go to hit the stop loss. So what we actually have, instead of full stop loss, we have half stop loss. $35.4, and we have 17.7, and we have minus 17.7. Okay, then we move lower, move higher, and this one was a stop loss. 33.3, and we have minus 16.6, we have minus 16.6. Let us go further. This one is obvious stop loss. Control C, Control V. So we have 306, and we have minus 306, and we have minus 306. Pretty typical for yen, I suppose, because for dollar yen I also had a very bad beginning. It was not very good. Okay, the next pattern looks this way. We complete it. Then on this candle we go higher, then we spike even higher, we hit our half, and then we go back, and it is half stop loss. Control C, Control V, and simply type the numbers. Minus 19.4, minus 19.4. So the next pattern looks this way. Okay, these minor movements don't actually break the structure. They look pretty okay for this to be qualified a good pattern. So let me see if the pattern completed. 28.0. We need to type some numbers here. 28.0. So it was completed, right, tick by tick, and then it goes to half, and then it goes to the first target on this very candle, and only then it reverses. So it is one target winner. Control C, go here to paste it, Control V, 567, and we hit 567, and we hit 0. The next pattern is the bearish one. Very simple, big candle. We do not hit the stop loss, initial stop loss of course. Then we reverse, and then we go to hit target 1. Then we reverse back. We do not hit the entry, and then we go to hit target 2. So it is both target winner. And let me type it. So what we have 644 winner, and then we have 1288 winner, a large winner, 128 pips. Another pattern is very similar to that. After we hit this target, yes, we complete this second pattern, and then we gap to the upside, hit the first target, then we go higher, then we come back to entry, and we hit the break even for the second target. So it is one target winner. What we have, 558, and then we have 558, and then we have 0. Let us, you see that? We almost recovered. So let's draw the chart. Maybe something of this kind. So here's the chart that we have. It is almost recovered. Let me move it somewhere away, not that far, maybe somewhere here would be okay. Well, that's it. Hope you understood the idea of cutting the loss, placing the take profit one the same distance as take profit as stop loss distance initial, and take profit 2 as twice of that stop loss, and cutting the loss when you reach half. So this is the trade management. Okay, what I did, I simply enabled that. Well, that's it for today, guys. Hope you liked this video. If so, give me a thumbs up, share this video on social media. Until then, good luck and good trading. Hope to see you soon.